You've just suffered a disaster, a fire, a flood, a structural failure. You call your insurance company and they dispatch your assigned adjuster. This professional is supposed to be your ally, right? Wrong. The cold, brutal truth is that your adjuster is trained and incentivized to save their company money, often by minimizing, delaying, or outright denying your claim. Their success is literally built on your failure. This is the shocking conflict of interest at the heart of the insurance system. Here are the 4 shocking reasons your insurance adjuster hopes you fail. Reason 1, they have a direct conflict of interest. Reason 2, they use the delay and deny strategy. Reason 3, they set a trap with a recorded statement. And reason 4, they initiate surveillance on you. Let's break down these hidden tactics. Just as the adjuster represents a hidden financial threat to your physical assets, the internet harbors hidden vulnerabilities that compromise your privacy and security. You need protection against those who profit from your data. That's why securing your digital environment is an essential defense. And for that protection, I trust NordVPN. NordVPN encrypts your connection, building an impenetrable tunnel that shields your online activities from hackers, snoops, and data brokers. It's your defense against hidden digital threats, much like having an advocate for your online security. Beyond robust security, NordVPN gives you the freedom to bypass geo-restrictions, granting you private access to global content. With thousands of high-speed servers in a strict no-logs policy, NordVPN ensures your digital life remains secure and under your control. Don't let hidden vulnerabilities compromise your online assets. Secure your digital self today and use code Defect for up to 73% off plus 3 extra months. Let's start with reason 1, the conflicting interest. The adjuster is an employee of a massive corporation whose primary fiduciary duty is to its shareholders, not its policyholders. Their loyalty is to profit. Their success is measured by their claims-loss ratio, the ratio of money paid out versus money brought in. If an adjuster consistently pays out large claims, they are quickly flagged and viewed as a financial liability. Conversely, if they routinely minimize payouts, they are viewed as a valuable asset worthy of bonus structures and rapid promotion. This system creates a direct, undeniable, and unethical conflict of interest. Their annual bonus, their promotion, and their job security are literally tied to how little they pay you. They are not paid to be fair or empathetic. They are paid to minimize risk to the company's bottom line. This is a systemic financial defect designed into the very metric of their corporate success, forcing a battle between the policyholder and the profit motive. Next is reason 2, the strategy of attrition or delay and deny. Insurance companies understand that following a major disaster, you are financially and emotionally vulnerable. They weaponize time. Adjusters are trained to use procedural delays to wear you down until you are willing to accept a low settlement, often significantly below the claim's true value. Tactics are pervasive, requesting excessive, often contradictory documentation that takes weeks to compile, failing to return calls promptly, forcing you to constantly chase them, scheduling investigations months out, or repeatedly transferring your claim to a new adjuster, forcing you to restart the process and recount your painful story. The goal is simple: stretch the investigation until your financial and psychological stress forces you to surrender, accepting a fraction of what you are owed under the belief that some money now is better than fighting indefinitely. This psychological warfare leverages human desperation against the company's legal fortitude. Moving to reason 3, the weaponization of the recorded statement. Very early in the process, often when you are still in shock, grieving, or dealing with chaos, the adjuster will request a recorded statement, framing it as a routine part of the process to get your side of the story. This is a massive, deliberate trap. They are trained by the company's legal department to ask specific, leading, and ambiguous questions designed to elicit details that can be used against you later. If you casually say, "I feel okay today," they will use that quote later to argue your long-term injuries were not serious. If your initial account of a minor detail changes due to later trauma or clearer memory, they will seize on that inconsistency to question your overall credibility and suggest fraud. They are looking for any admission of fault or contradictions that can invalidate your claim entirely. Never give a recorded statement without fully consulting legal counsel, and never admit fault. Your own words given under duress become your greatest legal vulnerability. Finally, we have reason 4, the surveillance state. Adjusters don't just assess damage, they investigate you. If your claim is large or involves personal injury, the insurance company may conduct surveillance, including hiring private investigators to physically follow you. But the easiest, cheapest, and most common method is aggressively monitoring your public social media profiles and activity. They comb through your photos, posts, check-ins, and comments looking for anything that contradicts your claim. Did you claim severe structural damage but post a photo of yourself happily on a vacation taken a year prior? Did you claim severe back pain but posted a photo of yourself smiling while lifting a small item? Even if the photo is old, misleadingly framed, or completely irrelevant, they will use it to argue that you are exaggerating your injuries or damages. This is a cold, calculated tactic that turns your personal life into evidence against you. Leveraging the openness of modern digital life to justify claim denial and save the company millions. A major tactic in minimizing payout involves the deliberate confusion over valuation, the replacement cost value, RCV, versus actual cash value, ACV trap. When you purchase a policy, you assume you're getting RCV, enough money to rebuild and replace your items brand new. But many policies default to ACV, which factors in depreciation, meaning the insurer calculates the current, used value of your 15-year-old roof, 10-year-old furniture, or damaged structure. This difference can leave policyholders hundreds of thousands of dollars short of the funds needed to start reconstruction. Furthermore, the insurer often holds back the depreciation amount, only paying the RCV after you complete the rebuilding, a financial hurdle few can clear without the upfront capital. This gap, this shorting of the true replacement value, is a massive financial trauma, forcing victims into debt or into accepting smaller, lower quality reconstruction. This ACV tactic is a fundamental mega defect in the design of the payout system itself. The final assault comes through biased testimony and legal gaps. For any complex claim, the insurance company hires its own third-party experts, engineers, roofers, general contractors, and mold specialists. These experts are financially dependent on the insurance company for their continued employment, creating an undeniable conflict of interest. Their reports are often tailored to find a pre-existing condition, poor maintenance, or a non-covered peril, effectively justifying the denial. You are fighting one individual, but behind them stands an army of specialized, biased professionals. Additionally, a major financial blind spot is the lack of building code upgrade coverage. When you rebuild a damaged structure, you must comply with all current building codes, not the codes from when your house was originally built. This means you may need new electrical systems or structural components that add enormous cost. If you lack a specific, expensive ordinance or law endorsement, the insurer will not pay for these legally required upgrades, leaving you entirely responsible for thousands of dollars in mandated construction costs. A systemic legal failure that exploits consumer ignorance. The insurance system is a necessary component of our financial world, but the adjuster's role, the ACV trap, and the legal loopholes create a systemic conflict of interest, a powerful mega defect. Their job is not to ensure you receive maximum compensation. It is to ensure the company pays minimum cost. To protect yourself, you must assume the adversarial role. Document everything before disaster, never give a recorded statement without legal counsel, and limit all communications to facts only. Your greatest defense against a system designed to wear you down is knowledge, preparation, and unwavering vigilance. Have you or someone you know experienced any of these bad faith tactics? Share your story and warn others in the comments below. If this expose on the hidden insurance game resonated, hit that like button, share this video, and make sure to subscribe to Mega Defect for more investigations into the systems that fail us.